Welcome everyone to the Kendall Report. It is Thursday night. This is the final broadcast for the week. So before I get into the details, make sure you subscribe, like, and share these videos, and also hit that notification bell. I have to give you folks a penalty. Did not get the 1,000+ likes last night, only about 750+. So please make sure you like. It's free. I do my part, you do yours, and we do a great partnership together. So, well, folks, looking for some kind of top to come in here. Wasn't today. By S&P up 0.99, Nasdaq up 1.36%, and Russell up 0.48. No top there. Maybe snap will snap the markets, and we're seeing a little bit of weakness overnight, but we were down double what we are right now, just about, and the markets rallied back. There just seems to be this insatiable desire to buy the markets right now, and it's very interesting, I think, as we look at what's going on. We're looking at just about every metric that you can find, PMIs, any economic metric. The claims came out yesterday. They were up 251, one of the bigger numbers for a while, up 1.384 on continuing claims. Every metric you can find. Earnings missing for the most part. There's a couple coming in a little better than expected, but for the most part, every metric looks like crap right now, right? And we're starting to finally see what I've been talking about for a number of months of the markets actually starting to hit that wall. And I think the wall is just starting. And we've already, I believe, and I said this last night, I think we went too far too fast. You'll see here in a minute when I go through the database that we're still getting a little traction there, but I think it's played out. So we're at that point where, okay, everybody's in. Who's the next person to buy? Who's going to be the bag man on this rally? So we'll have to see how all this plays out over the next several days, but we're definitely seeing some amazing strength. And like I said, it's been dominated mostly in the tech. Remember when the energy was the only thing in town? Energy down 1.7% today. Crude down 3.5%. Everything has flipped the script from what we were talking about going back even 6 weeks ago. So we're really seeing the tech stocks drive everything. Tesla had a good day today, I think up 9.5+%. So everything was good. But so we had the big event probably was the ECB, right? ECB raises rates by 0.5%. I have to tell you, I watched the live interview. It was at 5-something a.m. my time this morning on the West Coast in the U.S. And Lagarde, she made Jerome Powell look like a genius. It was amazing how some of these questions are being answered. And I guess maybe how they weren't being answered and how they were just stating policy and regulations and stuff like that. They weren't answering any questions. And then they made it, I thought this was the defining moment, is that Ms. Lagarde said there will not be a recession. Now we're talking about Europe. There will not be a recession this year or next year. Absolutely amazing statement. I got a feeling this one's not going to age well. So meanwhile, unfortunately, you folks over in Europe, I know I've got a lot of folks watching me over there. You're being just this Ukrainian situation and Russia gas and all that. It's just a nightmare, just a complete nightmare. And I made a comment on my Twitter account that yesterday was just and it was just, yeah, it's bad. I'm sorry. It's just going to be a more difficult time coming as we get toward winter. We're already talking, here it is July and we're talking about winter in Europe, how bad it's going to be. So if it's like anything else, the more that something gets talked up, maybe it's the opposite. So I guess what I'm saying here is we're seeing a contrarian move here in the market. Based on the metrics, we shouldn't be seeing this rally, but everybody's piling in, and we'll see who the last player is in. There still seems, like I said, we were down about 20 handles on the futures on the S&P. Nasdaq was down, I think, around 1%. All that stuff has rebounded. I'll go through all the details here in a minute, but we just continued to see this snapback. Let's take a look at, just have a couple other notes. Philly Fed index came in minus 12.3. It was expected minus 1.3, 12.3. All the housing numbers are terrible. And what's amazing, I made a side note that somehow the home builders rallied today. So, it's really mind-boggling when we see some of these movements in the markets and how the cash flow actually goes once you read the story and and then watch the action. So it's sort of like a old buddy of mine on the trading floor. The arbitrage folks would come in, the arbs would come in, and he'd say, do not pay attention to the man behind the curtain. So referencing the Wizard of Oz doing all the levers. It was not real. This was just fictitious. It was going to last for a few minutes and it was going to go away. And that's a lot of times how these markets are running. And now we have the algorithms. I talked to you folks a bit last night. Not sure I had really good illustrations of it, but once again, intraday, we're in our live room and we saw these same patterns. I have weird names for the Wavetech webs on the indicators. If you have those, you've seen that if you've been in the live rooms or watched any of those replays. What's interesting is there's this thing called a dragon head, and dragon head usually resolves itself to the upside, and there's like a neckline. There's a bunch of funny things I made up because I was trying to describe it to myself. But the point is that we had, coming off the lows yesterday at all the way down to, I think it was 36, 39, 36, rallied all the way to the 4,000 handle, right? There were 5 of these dragon head patterns on the way up. We'd go up, consolidate, set up a pattern, do another rally, do another dragon head, one after another. And I believe what's happening here and what we're able to pick up with this indicator is a lot of really interesting reoccurring patterns. And this is being generated by the algorithms, and it's very predictable. And they were just, like I said, they kept coming through all day long. We spent the last 3 hours in the live room of the trading day, and I believe there were 3 of them, including coming right into the final half hour, and we printed right in up into the close. Of course, right after the close happened, selling came in, snap, earnings came out, and the rest is history, as they say. But let's talk just a minute. This is the title of tonight's video is Next Week, the Fed. So this is really interesting, and I'll talk a bit more about this when I get into covering the interest rates tonight. But we're seeing interest rates back up. And that's the other thing. It seems to be that the bonds have got the right message. And that message is that everything's slowing down. The PMIs, the earnings reports, all of the things that I've been talking about, every metric, Philly, Fed, you name it, everything's down bigger than expected across the board. And, even in the ECB raising rates today, they chose to ignore that Italy is about to collapse as we speak. And I think it's, I may have this wrong, TIP or something. It's basically their QE program. And Lagarde was saying that that they'll use it if we have to. And then they ask her if they're going to use it on Italy. And well, that's political, so we can't do it. I mean, it's just contrary. What does it matter why the crisis happens? It's just, it's laughable, folks. I talk about this all the time on when we're looking at these people running these major entities and central banks and governments and all this stuff. Like Mario Draghi, he's one of the biggest problems in Italy. Obviously they got to where they got to through his leadership. Everybody seems to forget about that. And I know I don't know a lot of those details. Somebody will probably correct me, and I'll hopefully read your comments. But the bottom line is, all of these events, everything that's out there, this is what the bond market's seeing. And I'll go through more details when we look at the interest rates, because they're telling a completely different story than what the equities are telling us. So let's go ahead and take a look at the database and get into tonight's video. Okay, so we did have some more buying. We had 384 buys, 110 sells, so not a lot. We went from yesterday we were at 72.75%. And today we are at 76.63. So we upticked. I talked about this last night, that we really are getting to the extreme of where this database goes. I said 72, 78. Here and you can see we're starting to struggle. Well, not really struggle, right? What's happening here is all of the stocks that can be bought have been bought. We now have 12,365. So I talked about this last night. We have 3 out of 4 symbols in our database out of 16,165 have buy signals, therefore have recognized trends. The duration, I just want to talk about this for a minute. The current duration is 9.55 days. The average duration is, we'll call it 39.75 days. So that means that we have still another almost 30 days left in the longevity of most of these symbols. Now, these are average numbers, and we also can see a rotation, so they could extend. So what I'm saying here is that we are seeing enough traction in the database. All I'm looking for in the market is maybe some backfilling here. We printed up to 4,000, that we're going to come back a little ways. I just want to mention something else, which we're coming into Friday. And Friday is where we run our intermediate models. Those of you using Wavetech or our Portfolio Expert product, you're going to see the potential for finally get some traction on the intermediate models. Right now we're at 11.5, I think. I'm just rounding numbers, 11.5% bullish. I talked to you about this last Thursday night for Friday, is that maybe we could get up to 12. Maybe we're going to get some serious buying coming in, because a lot of these patterns have turned around. And these are the next levels. So when I'm talking about the short-term database being 75% long, a 40-day duration, those durations can set up that we get enough of a rally that we start to kick in bigger trends. And the intermediates have about a 200 to 250 day holding, and these are market days. So that's a better part of a year. So when we start to get some of that traction, if we get material traction there above that 42%, that would tell us that we would have a major low in this market. Now, as you folks know, and I'll discuss this some more tonight as I go through the broadcast, is that the expectation is for a third quarter rally. Expectation, I'm going to see if I can post a video I made in the live room yesterday. I might clean it up a little bit, but I did a very deep dive on the S&P and the targets. And I'll just tell you, everything comes to around 43.60 is the target for this quarter. And I'll break that down, and hopefully I'll be able to post this video that I did the other day. I think I can clean it up just a little bit and get it produced and out on the channel. But just know that what we're watching here is the intermediate trends. If we're going to get some buying coming in there, we get some material buying. 22 is a minimum number, 22% bullish. Maybe we get above that. Maybe we see a tranche of orders coming in. That's going to really be convincing about this cycle that I'm seeing here for this Q3. And here we are, 21 days into the first month, and right now it's acting pretty well. So I don't expect it to be straight up. We should get some kind of peak here, a backfilling, and then another rally. And I don't necessarily think we're going to rally to the end of the quarter, but we'll see how it sets up, because that's what we do here, right? We let the markets lead us to where it's going and what the patterns are going to unfold. So let's go ahead and take a look at the S&P. Okay, so the S&P is down 15 handles, so it's pulling back down just a little bit right now. Yesterday, let's just review yesterday's action here. I've got the market grid up there, we didn't quite make R2 was 4,005. We actually did make it 4,004.75. We printed an R2, and the low was just shy of doing an S2. So we traded between S1, S2, and an R2 on the upside, which is pretty amazing volatility because we're looking at just shy of 100 points, about 80 handles in the S&P. So we did see a pretty decent move on the upside, to say the least. I do want you to notice there is some targets that are embedded here. You'll see high target 1, 39.73. High target 3 is 40.16. You'll see that in the pop-up on the screen. So we came right into that high target 3. And what's interesting, no matter how strong the market got yesterday, the PPMs never responded. And this is very similar to what happened when we were in a pattern in the past, like going back to March. We saw the same kind of thing where the markets got stronger, but the PPMs didn't participate. They were telling us there was something wrong with this rally. And I think that, like I've talked about, I think there is the possibility of at least a move back into the moving averages. They're at 38.86 now as we come into Friday on the 10-period moving average. So that's actually 100 points down from where we're at. 38.68 is the number, and those numbers are coming up. I do suspect as we look at the grid for tomorrow, S1 is 39.82. We've already printed that. S2 is 39.60, and S3 would be a retest of yesterday's low. So can we print above the 4,000 handle to an R1 40.20? I guess anything's possible. We really don't have a lot of news of any sort coming out. We have IHS, PMI services, and manufacturing. They're not really material numbers, so I don't see that having a real effect on anything. But it looks to me that if we get through this 80 level, the low overnight's been so far 80.50. We get through that, then we're probably going to see S2 maybe 39.60. Downside's probably going to be limited just because of this amazing appetite for the buy the dippers are out there in force right now. So it's very difficult to get any kind of rollover unless there's something that comes out. Maybe Italy fails, something happens that's unexpected, then maybe they could get some more traction on the downside. But right now it looks to me that we're probably going to see it maybe an S2 for tomorrow. Let's just take a quick look. I'm going to go over to the weekly as we finish this week. And it's interesting. R3 weekly seemed somewhat unrealistic last Sunday night when I was doing the video. 4,008 was R3. We printed 04. So we're not likely probably to get above that number. We're probably seeing the high that we printed yesterday. And we look at the range, which is pretty amazing, folks. If you look at these, if you have these indicators and you have the market grid, you can use it with a TradingView free account, so you don't have to pay for another subscription to use it. But the bottom line is, look at S1, 38.20.50. Look at the low, 38.20.25. The R3, 4,008. So we literally did an S1 R3, and I was I recall talking about an S1 R2, which would put us to 59, which was a retest of that 39.48 high that we had. So we definitely did that for sure. Now we're trading 38.75. We're down 15.75 on the evening. But this brings in context. When I go through these weekly numbers, if you have these indicators, you can set up a pretty good expectation for what the range is going to be. And even going back to last week's, 37.23 was the low, and we had a S3 37.36, and the high was 3,900, and we didn't even get to an R1 last week. So we had a similar number at 39.52. But this week was spot on, and this was pretty amazing range and activity that we saw this week. Like I said, just relentless buying coming in. All right, well, let's stick with the weekly charts here. And same as in the S&P, the high so far at 12,655. R3, 12,619, 12,808 is RXT, so we traded all the way up. Look at the PPMs. I was talking about this last week. Look at these PPMs. They are just screaming on the upside, and this is the weekly, so this is an intermediate trend. And we have these Fibonacci targets that are up here as well. We've got Fib target 1, 13,394, 14,283, and 14,8. We'll round that off, but we get up to the Fib target 2, and all of a sudden we're trading up to the 40-period moving average on a weekly, which is that 200-day moving average that I'm talking about. I think we end up there across the board on the S&P, on the Nasdaq, and ultimately probably on the Russel as well. Let's take a quick look at expectations for tomorrow on the Nasdaq. So far, we printed a low of 12,529. S1, 12,561. So we printed below that. S2 is 12,472. Look for that to be a low. I don't know if we'll be able to print an R1 or not. That's going to require a new high on these indexes to print above yesterday's high. I think there's a good chance that we saw the high, but that would be your expectation both on the S&P and the Nasdaq that we would print an R1. And I think that I just went through the numbers on the S&P, so that number here is 12,719. Here's the daily Russell. The Russell continues to move up, but just like with all of these indicators, with the Nasdaq, the S&P, and now the Russell, we're seeing the PPMs turn down. They're still in robust trend mode up here, and we're seeing starting to see these angle of attacks pick up right now, and the underlying trends start to trend up. I did not have the models up for the S&P, but I believe it was 3886 was the buy signal that came out of our models for the daily just a few days ago. And I think all of these indexes have gotten a buy signal, and those things will tend to last for at least that period of time. This is dailies, like you see on our Wavetech models, where you're going to get 20, 30 days. It doesn't mean they go straight up for 30 days. It means that there's a trend, higher highs and higher lows in that pattern going on. So I suspect that's what we're going to see across the board in all these indices. Okay, next is the 10-year. As I mentioned, we actually got an STX buy signal, the low 2.95. We closed at 2.91. So we did see unbelievable buying coming into the bonds and in the 10-year, and we flipped all the yield curve, we steepened as the yields went down. So we're just seeing, if you look at the PPMs here, they are absolutely collapsing. Minus 0.33 on PPM 1. Anything under 0.25 is a downtrend. Minus 0.62 on PPM 2. And so we have really a strong downtrend forming. I'm going to bring the weekly up here in a minute. You'll see that rates on the back end of the curve are trending down, okay? So they're not trending up. And I went through that example the other day of the yield curve, and I guess I could try to maybe I'll bring that up. Let's go ahead and let me just bring that up while we're talking about this here right now. Okay, let me I'll come on screen here. So I did this the other day where we had we've got 4%, 3, 2, and then we had the 2-year, the 5, 10, and 30 out here. And what this is my expectation for the yield curve is that even over here, let's put the Fed funds over here. Even over here, we're going to look at somewhere 3.5, maybe as high as 4% on the Fed funds, right? We could get that kind of number, and then everything is going to be downhill like this. That's a true inverted curve, especially when the very shortest end, where the 13-week, right now the 13-week T-bills I think are 2.25. All of this stuff on the short end gets up like this. All this is telling us is this is the true sign that a recession's coming, or the confirmation that something's coming. And I think this whole situation is going to come on us a lot faster. And right now we basically we're kind of jagged along 3% with from the 2-year onward, right? The 2 years a little higher, 5 years higher than the 10, and then the 30 kind of ticks up just a touch at the end. But this is what I'm expecting to see, is that we're going to see all of this inversion. The Fed's going to be committed. As we come into next week's meeting, we're going to hear all this stuff again. Whether it ends up to be bullish is going to be, most of the time when we get these Fed meetings, they end up to be bullish. Somehow they manage to convince the markets, the algos, whoever, that everything's okay and it's going to be okay, and we're going to get, a good old soft landing. That's what they're shooting for, right? So anyway, this is what I'm expecting to see here on from the yield curve perspective, and I think this will become more evident. This will be confirmed by activity that we're going to see coming out of the economy and the actions by the Fed. This is all going to be what happens here from that standpoint. So just get ready for it. We've got a big week coming next week. I always say, well, this next Fed meeting is the biggest meeting, most important. They're all important, but it's really about the rhetoric. And like I said, watching the ECB, just to step back here for a second, watching Lagarde and some of these other players in the ECB, good God, I mean, we're in trouble. There are people that they're going to go month to month and watch the data, just like the Fed's telling you. What they're really telling you is we have no clue. We're going to try to respond as we see stuff. We don't really have a strategy. We're just reacting to it. Okay, so crude oil is next. Crude continues, like I've been talking about, it stays in this range, folks. 96.10 was the low. We did see a high just a couple of days ago, up at around 101. So 95, 102, 103, we're going to stay in this. The PPMs are actually turning up here, so they're starting to stabilize. So I'm not seeing any further downward pressure as we come through and come into the end of the week. We'll look at the weekly chart just to get a setup there. But this is absolutely starting to stabilize, starting to suggest, and the weekly chart will be the best measure for this, but it looks to me that we're going to want to get back up toward that 21, which is back to 99, no big deal, and maybe up to 105 plus. Let's take a look at the weekly, because I think that will give us a little more insight on what's going on there. So here's the weekly. 101.51 is the 21-week moving average. Once again, we're negative on PPM 1, so that resistance 105.30, that's just where I talked about on the 40, which is usually somewhat equal to what the 10-week moving average is. And then the 21 is at the 101.51, and we have an upward bias at 0.76. And that acts almost as a magnet for the market to get back above that level. Now, we were hovering. We closed last week below it. We're below it again, but we're closer to it than we were last week. We closed at the 94.57 level. Right now, we're at 97.70. And just looking at the market grid, 97.75 is actually R1 for the week. R2 is 101.30. I don't think we get up there, but I do believe that we're going to continue to try to follow in the slope up here, and for sure we'll be sandwiched at the worst. And I talked about this number. Probabilities of reaching it are fairly low. 85 to 1, the 101 level is the extreme range. Probably 105 to 85 is the extremes. 101 is the expected, and probably staying around 95, 96 like we've been doing is where we're going to stay there. So we have the weekly gold continuing to hold right around the 200-week moving average. That number is right now 1733. We're at 1732.3. I talked about we're just really hovering along this line. And as long as we stay around this, we're probably going to be fine. I think the Dow has at least put in maybe a short-term high. It might be something more significant. We'll be able to nail that down probably more next week. And certainly, I talked about just mentioning the Dow here as we're looking at gold. Is I talked about some of the things that the Bank of Japan basically said they're not going to defend the yen. So everything's free floating right now. The Dow is kind of hitting an extreme. Maybe it prints 111. Maybe we saw the high. But we should have more information over the next week or so, and that's ultimately going to affect a number of other things. And I'll bring that into perspective as it happens, as we get a better view of what the Dow is likely to do. But gold trading right where it needs to trade just to hang on. It's hanging on with its tips of its fingers on the cliff. As I said, we've got some Fibonacci targets down below here, 1682, 1598, and 1547. Based on the Dow, maybe gold shouldn't be where it is. There just seems to be enough interest in it to hold it here, but it's, I think, very vulnerable to the downside. So we got some ambulance action here. Sorry about the siren if you hear that. The Same thing with Bitcoin. We've talked about this quite a bit. This is the weekly Bitcoin. We're at 20. The average is 24,226. We actually traded up to 24,271. So we traded just above that. We pulled back a little bit here, 23,060. We're still looking at PPM1 down minus 2.89. So there's still a lot of downward pressure. Right, we traded right to the resistance. That's exactly where it should have traded. The 200-week moving average right now, 22,703. So I'm going to call, we're going to stay above 22,700 and below the 10-week moving average, 24,226. Don't see much going out of there. Like I said, let's take a look at the dailies because there was some interesting patterns being revealed there. The PPMs are still accelerating. We have a 1.20 value on PPM1, which is very much trend mode. PPM2 minus 0.44. So the only thing in here is the negative PPM3 minus 0.82. That's at 22.6. I think we just hover like in those numbers. Everything tells me 20, we'll just call it 22.5 to 24.2 is going to be where we'll spend probably most of the weekend. I don't see anything breaking out from here. And what's interesting, just in closing here, is when we did see the equity markets doing really, really well, we did get up to those resistance numbers, but we're not able to get through there. These are really big resistance numbers at this 24,000 number I just mentioned. So know that that's the case. Okay, folks, this is going to do it for tonight's video and for this week. And I appreciate everybody that watches this channel. Make sure you hit the like button. Got to have 1,000 plus every day. And also, make sure you get these indicators. I am working on a project right now that I think you'll find interesting with putting some more things together. I have some distractions, we'll call them, coming up in the next couple of weeks, but I have a lot I want to get done before then. Make sure you sign up. You can use market grade. You can use up to 3 indicators on the free version of TradingView. You do need TradingView to get these. There's been some confusion about that. So check it out. There's a video here you can watch and find out more. And also there's a 3-hour video that I did, I think about a month ago, that you can watch. And I went through a lot of deep dive on a lot of, on just about everything involved in these indicators, philosophy, all that stuff. So you got some spare time, I can fill it for you. Anyway, folks, thank you so much. All of you, somebody said they were grateful to be here. I'm grateful you're here, and I am grateful to be here as well. So anyway, have a great weekend. Good day trading tomorrow. Finish off the week on a strong note, and we'll see you on Sunday night.